What it do, YouTube? In this video, we're going to be breaking down some trades and how I made 100% returns on back-to-back trades like I'm Drake. Let's get into the video. Alright, so I'm filming this video Friday, August 5th. It was a pretty good week for me. I'm going to be breaking down some of the trades I took, why I took them, the steps, everything like that. And if you stay tuned to the end of the video, I have my very first live trade. So you want to stay tuned for that. Let's get into Thinkorswim. The first trade that I closed was this PayPal trade. I opened the trade July 20th, and look at what I was seeing right here. So pretty much I got the $90 calls on PayPal that expired August 26th. And as soon as I saw PayPal basing and trying to push out this level, key level marked out here at 75.43. So as soon as PayPal broke over it, I waited a day. I tried not to buy the initial breakout. So right here on July 20th, price broke over this yesterday high at July 19th to confirm this price action. So I decided to get in the $90 strikes. And now I had these key levels marked above at 82, 86, and 88. My first initial take profit was going to be here at 82, but I only took one contract and that was a month out on the time. It was over 45 days to expiration, so I wasn't really worried about holding. Price broke through this key low at 82, kind of pulled back to my entry, but I didn't panic. My stop loss was below this low at 67, and the contract is only about like $4, so I wasn't really risking too much on the trade. If it went back down, I would have maybe lost 100, 150 on this trade. But then price shot up, and I ended up closing on this day right here as it broke over this key low at $88. I didn't want to hold in the earnings, which was right here on this giant gap up, because you never know what these small companies are going to do. So let's just jump into the option contracts and I'll show you the price and how they moved on this trade. All right, so now looking at the option contracts. So I took my initial position right here on July 20th. I got in about like 2.9, so somewhere in this region right here. And the swing lows on this contract were about $1.17. So if I stopped out below that low, I was risking maybe 180 if I let it get that low. But I was pretty much in zero drawdown this entire trade. So price kind of bounced around, started trending upwards. So on August 1st right here, the price kind of gapped down. If I zoom in a little bit further, price kind of gapped down to 4.6 and kind of bounced back up. So I ended up closing right here about 4.9. That was the Highland candle. But then as you see, price just kind of, they were the 3x overnight if I held through earnings. But like I said, I don't really like holding through earnings because you never know what's going to happen. But that was a pretty good trade for me. You know, I was 2.9 to 4.6. So I made about like 180 on the trade. But overall, I really like the patience on the trade. I took it off the key level once it confirmed highs. And even on these pullbacks, I didn't really panic because it was a small position for me. And that's the biggest thing for me when holding overnight. I'm always comfortable with the position size I take. I'm never going in huge overnight, so I'm never really sweating or panicking if I swing trade a position. And that's the key thing to focus on in this video. All these positions I'm holding overnight, they're small size for me. And if they happen to go to zero, it doesn't really affect me that much. It's not going to be the end of the world. So if you're going to be holding overnight, just be cautious that anything could happen. And you have to be comfortable letting it hit zero if you get some, terrible news overnight. Don't oversize if you plan on swing trading, but also try to let the position work for you and try to go for those higher percentage gains. Because when you look at this contract right here, like I said, I went from 2.9 to about 5.49. I made about 70% on the trade, and you can make 70% day trading, SPY options, 0 DTEs, but they're pretty tricky and they can be pretty detrimental if you don't know what you're doing. So I really just swing trade position with very minimal risk and also get those higher percentage gains. Pretty nice trade for me. Anyway, moving on to AMD, which kind of carried this week. All right, so the first trade I took on AMD this week, I opened the position on July 29th, which was a Friday. And I took the $100 strikes that expired on August 19th. Now, there's a few things I saw here. So on AMD, I had these two key lows marked out, one to 88 and one to 91. Look what happened here. Price bounced off this key low from $72. Formed higher lows off it, went straight into this key low at $91, got rejected, then ripped right through it. Then when I saw price going straight through this key low at $92, this is my entry. And then price pretty much went straight up this entire time on AMD, so there's pretty much no drawdown on this trade. Now if you go down into the options contracts, you kind of see what I mean. All right, so looking at AMD right here, I have the levels marked out on the right hand side of the options chart. So my entry is right here at 2.3 on July 29th. My stop loss would have been like somewhere around this low. It's hard to have an exact stop loss on swing trades because, contracts. You have to give your contracts enough space on the swing, but you also don't want to get stopped out instantly because you plan to hold overnight. You always have to have a trade plan, and my trade plan was to hold this trade and swing it. So my stop loss would have been roughly in the $1 range. So I took two contracts. If it hit my stop loss, would have been like a loss of about, 260, somewhere in that region. But initially when I got into the position, there's a little bit of drawdown here. on the options contract. So I got in at 2.3. We pulled back to lows of $1.96, $1.09. So I was down roughly $80 at one point in time in this trade. But like I said, I had my trade plan. I didn't panic. I held to this drawdown and eventually ended up closing up green. I ended up like closing at 2.8 on the day. And then the next day on August 1st, which is this candle right here, price kind of opened up here. I cut one contract at 305 just to eliminate some of my risk on the position. And because we're coming to earnings this week on AMD, so I didn't want to, I just took one off just to give myself a little bit of cushion to hold a little bit longer. I might have cut that first one a little bit early, but you can't really predict the future. So, I mean, AMD price shop, the highs of 98 on this day. Contracts kind of floated around 3.4. And then the next day, AMD ripped over to 101 and contracts hit a high of 5.4. So my contracts went in the money. And then they had earnings the next day so I ended up just cutting it, calling it quits before the earnings call. And the contracts, it came back down to 2.3 my entry, and they ripped over to $7 the following day. But let's just zoom into an intraday time frame on AMD so you can kind of see my final exit on this trade and what I was seeing. This is the day of earnings on AMD when I was holding my last contract. So pretty much I was just riding the 90 EMA up the entire way. Like I've said in previous videos, the 90 EMA is a great tool to guide your entries and exits. AMD pretty much went vertical like Lil Uzi. And all I had to do was ride the 90 EMA up the entire day. So AMD opened at like 96.48 and then hit this kilo at 99 and broke above 100 for a second. Just kind of started chopping around sideways till earnings. And if you look at volume down here, it's kind of hard to see it, but you also had increased volume on the way up, which is what you want to see on a breakout or a continuation move. But then you just kind of died down after this move. So that, along with the kilo down here, and I was already up over 100% on my last contract, and you broke up with the 90 EMA, and you had earnings after hours, it was pretty much pretty simple to cut the trade right here. I really don't like risking anything in the earnings. I never really like to gamble on earnings because it's always a coin flip. So I just walked out the trade, exited around somewhere in this region at 5.4. So I got my contracts here at 2.3, and just do the math. So I made about 140% return in just under two days on AMD, which is a pretty nice return if you ask me. The following day, I took one more trade on AMD, and we'll go into that one here in a second. So the day after earnings on AMD, which would have been August 3rd, I decided to open up another position here on AMD. And just on the bottom right hand side of the screen, we have the NASDAQ 100. And I liked where the NASDAQ was sitting here. So you kind of had this little double top potentially forming here. But in the overnight session, you kind of just started bouncing out. And then once you broke over this top right here, around the market open, it kind of gave me some confidence that the AMD was going to continue higher, and that the sell-off on AMD was just kind of, unwarranted. And that's what I've been doing recently in my swing trade positions. When they go up so fast, I just like to roll into further expiration. It's called rolling up and out. And I'm also just taking money off the table and reducing my risk. NASDAQ looked good, so I just decided to get back into AMD. I got the 105 calls. So I got the AMD calls here at 276. My entry was pretty good, to be honest. I almost bottom ticked it. It would have been about 5 minutes in the market open. So I got in, and almost immediately the contracts went straight up. I kind of pulled back here after hitting highs of 98, but once again, had a trade plan, didn't panic. My stop loss would have been, below lows, like $2, somewhere in that region. My original stop loss was below $88, but I really didn't think AMD was going to reach that region. And plus, since I rolled out to September 16th, to give myself even more time so the contracts aren't as volatile. The contracts just kind of chopped sideways back and forth. Nothing really happened here. AMD pretty much went vertical again, and the contracts pretty much went in the money. They were 40 cents away. So AMD broke through this key low at 99. I pointed this out in chat. You kind of had this breakover, this key low at 99.68. You broke over it, pulled back and retested it. I called that one out on the Discord. And then AMD rallied straight to the highs of 104.55. And the contracts originally hit highs of 6.9. I could have taken profits up here if I wanted to, but I did not. It's always kind of hard. And also, I kind of like how it's consolidating up here. I mean, there was really no reason to sell. Then on Friday, you had the jobs report come out in the pre-market. So AMD was kind of floating around 103 and pulled back down to $100.50 in the pre-market. So then the contracts kind of took a hit in pre-market. So I ended up just closing up market open for about 5.3 in the contract, which is still about a 94% return. I mean, I could have got a 150% return, but I'm never going to complain about a return of $270. So those were my two trades on AMD. I think they went pretty well. And I just took a small loss on a Microsoft 290 call. I closed it for about a $50 loss. And then I have a few more swing trades open. I'm still holding my Netflix $300 call. And then I also rolled my AMD position out. I rolled into an October position. And also I have some Microsoft $300 calls, which I think are going to do well. Now we'll just jump over to the live trade I took on Amazon. It was about a 20% day trade on Amazon. So it's not too bad. So let's just jump into that right now. So I saw Amazon bouncing out this key level here at 135.35. I decided to get 2 contracts, 2 136 calls at about 216. Left hand side of the screen watching the NASDAQ and ES. Bottom right hand side we're watching the options contract. And the top right is my profit and loss throughout this trade. And pretty much I was just watching for a push through NASDAQ and ES through highs. And I was hoping for Amazon to follow through. Now let's just watch this play out. Amazon started to pull back on me. I like how I held this 135 level. So I decided to add one more contract here at about $1.93. Brought my cost basis down to 208. I took one contract off here at 2.6 as it pushed through highs. I took one more off through as it broke 9 EMA. I took the final one off as it collapsed through 9 EMA and NASDAQ and ES started to pull back. And that's it for the live trade. If you guys like this kind of setup, just let me know in the comments below. Now time for the outro. Alright, if you guys like that live trade, if you like the format of it, just let me know. I'm trying to make it like a little bit more entertaining than, regular live trades. But anyway, if you learned anything or if this helped you, just leave a like and comment below. And stay tuned for the next video. Thanks for watching.